Good morning, everybody. Wow, this is amazing. It's great to see. Put the mic on. All right. Good morning, everyone. It's good morning, good evening, everybody. Here we are. It's the day that we've been waiting for. So today we're gonna be talking much about just forex itself and things that you need to know about forex. So we're going to be cutting all through all the three levels of or stages of forex, which is introduction, intermediate. We're going to go all the way to advanced as well. I'm hoping that you're keeping up well, and thank you for joining this wonderful evening. All right, so you're going to make it short and sweet, and it's going to be a very nice interactive session. I'm hoping that everybody's well, and let's jump straight to it and see how it is. Now, this webinar is brought to you by Anzo Capital Kenya, which is an international financial trading company. We basically offer competitive conditions across multiple global markets. For us, we can trade stocks, we can trade indices, we can trade currencies, you can trade all the way to metals such as gold, silver. We can trade. And by the way, we have is the first broker which has gold in grams. Okay, it's the first broker that brings to you gold in grams. The rest of the gold is usually in ounces. This we have gold versus the Chinese yuan, which is in grams, and we have it on our platform. All you need to do is just go to w.anzocapital.ke and open an account over there, and also jump all the way to Play Store and download the Anzo app over there. All right, then get yourself started, and you can access as much market as possible that you would like to have. Good. So let's get started. Today we're going to be talking more about just introduction to forex. We're going to go touch intermediate topics, and we're going to touch advanced topics as well. The chat box is open for everyone. If you have any question that you have, or if you just want to say hi as well, just say hi. Right? It's been a minute since was live, and we're just getting started. So a lot is coming. Please confirm if you can see the screen. You can see the presentation, and you can see. Yeah, if you'd like to see me as well, it's good to be seen. Yeah, I know. It's been a minute since we did this, but yeah. So we're getting started now, and it's gonna be back to back. Gonna be having it back to back coming in. So yeah, embrace and get ready. Let's get it. Let's do it. Let's enjoy this show together. Ask as many questions as possible. If you would like to, as well as please subscribe to the YouTube channel. As you can see, we just started the channel. It's quite new, but we're getting there. All right. So we're gonna want it to grow all the way up, so that. And by the way, if you check on the YouTube channel on the live section, you will see all the scheduled market briefs that are coming in for the rest of the week. They're already scheduled over there. So every day, 10 a.m., we usually do a market brief. We'll check on gold, check on Euro USD, GBP USD, depending with what you guys want me to check. We're going to be checking it. So we usually have like a 45 minutes to 1 hour session every day, 10 a.m. And we have a lot of things coming up. We have the coffee with Nick, gonna be doing it every Friday. We have a lot of stuff coming in planned for you. So embrace and be there. All you need to do is open an account with Anzo Capital, just open an account and let's get it. By the way, before I finish, or before I even get a bit further, on this specific webinar, if you get to stick from the beginning to the end, there's a chance for you to get a very nice bonus that is coming in. All right, it's going to be a $20 bonus. It's going to be deposited to your account. Just make sure you stick from the beginning to the end, and we're going to take it out from there tomorrow gonna get your account topped up with 20 USD. And of course, you can also unlock up to $2,000 USD trade yes, you can trade up to $2,000 USD trade credit. These are just 6 reward stages that you need to complete and get it. So log into your platform. There's a lot of offers over there, man. I mean, there's a lot of offers going on. Just log into your portal and check on the campaign and on offers and promotions. You will see a lot of promotions going on over there, right? Yeah, man. Yeah, Jex, it's good to see you. Yeah, I started with good morning. You see, I'm used to do the morning brief, but I keep saying good morning, good morning. All right. So today, it's a good evening. So let's get to it. Let's get to it. All right. In case of any question, throw it over there. The bonus, of course, is coming. And we have also a lot of merchandise that is there, of course. I'm going to be telling you in a few how you're going to get a signed jersey from the Phoenix Suns. As you can see, Enzo Capital is proud to be a sponsor of the Phoenix Suns, which is a basketball. So what our basketball? Tupatane kwa tent. Yeah, the fans of basketball, yeah, we have signed jersey, to be honest, man. I saw that and I almost decided to keep it for myself, but then again, yeah, I have to think about you guys, at the end of it all. So yeah, you're gonna be having some signed jersey over there coming out. I'm gonna should be showing you all of this, all right? Labda penye niko in the morning. Yeah, I may be in Australia right now, man. All right. So yeah, the agenda for this that you're gonna be tackling today, we're gonna be talking about what is the currency market, basic trading terms, trading methods, and trading plan. Yeah, we're gonna be going all the way to trading and investing, main trading system, and how Anzo Capital is gonna be helping you. Right. So we are here to help you, here to put you on check. Right. Anything that has to do with FX, of course. And just to mention before I forget, we are a regulated, CMA regulated broker. All right. We are a CMA regulated broker, and you're very good and very big on ethics and following up everything that is lawfully to present to you. So the content over here right now is fully educational purpose. So we're going to be going through it. It's good. Let's learn. The slogan here is trade made simple. We're just going to make the trade simple by giving you as much education as possible, and getting you onto track so that at least we can all grow together. Yeah. Some of you, I see most of you, I know you, most of you actually, we've come from afar, we've come far together, man, All right. Great. So yeah, the webinar is being recorded, so you're gonna be seeing yourself on YouTube. I mean, you get it's getting you psyched up, All right, Jex, I know. All right, so let's check. We're gonna start by looking at what is trading and what is investing. Most of the people usually do talk about I invest in Forex trading. Some talk about I'm an investor, and that time you're doing trading, and some of them are just saying that I'm a trader, or there's a lot that people usually get sometimes confused about, and I'm here to just cut through all that noise. Yes, guys. All right, I'm here to just cut all through that noise and get you the real thing. All right. So we're going to be looking at the difference between trading and investing, and all of these difference, we're going to be placing them on the 6 key pillars, which is the time frame, the profits that you make on that or that you target, main asset classes, the research, time commitment, and the risk. All right. So trading versus investing. So the difference between investing and trading based on time frame, we're looking at investing is done on a medium to long term scale. All right. It's a medium to long term. Trading on the other side is a short term. Okay. So trading, that the way you see, we can do day trading, you can be a scalper, you can do, it's basically short term. On the other side, when you look at the profits that you're targeting on investing, you're targeting capital gains, profits target from the capital gains and in asset incomes. Okay. Once you sell an asset, and because investing is mostly long term, like we talked, maybe let's say, for example, you purchase a plot of land and you want to sell it, you invested in. That's what people say in real estate. Maybe you're selling houses or you're selling land or you're doing stuff like that. Right. So it's a long term thing, and the profit will come from the capital gains, of course. the capital that you put in and the gains that comes on top, and the income that comes from an asset. Maybe you've hired the asset, or you're doing leasing or stuff like that. People that do Airbnb and stuff, Then on trading profits, you realize profit from quick rises and falls of asset prices. All right, the quick sudden movement, because in trading all you do is you can either buy or sell, and you buy when the market is going up and you sell when the market is going down. So the quick rises of market, it's a volatile market, of course. Yeah, it's a volatile market, and we're gonna be talking more about that. On the third pillar, which is the main asset class, investing, you're looking at the stocks and funds. And we're looking also on the trading side, we're looking at currencies, metal, oil, and more. Like I said, we also have the XAU, CNY, right? Chinese yuan. For the first time, I've seen this. Gold paired with the Chinese yuan in grams, man. I mean, you wanna try that. All the gold funds, you wanna try trading that. Of course, remember it's a volatile market, of course, and it comes in with a lot with risk, of course. But here's the thing. We are learning, right? We are learning. We are here to give you free education, get yourself ready and well equipped to do it. And also always do risk management on your account, of course, right? All right. Research on the other side, when you're doing difference between investing and trading based on the research, investing, we do it on fundamental and technical analysis. That's majorly what we look at. When it comes to trading, mostly technical analysis and short-term trading techniques such as scalping, day trading, and using the indicators and stuff, and all these other strategies that are coming out, SMC, what is the other one? Yeah, we're doing price action and all that stuff, right? Difference based on time commitment. Investing is low, of course. Like we said, if you buy a piece of land, you just leave it there. I mean, you're not really committed to keep the land every day or to be going there every day. It's the time commitment is low. On trading, on the other side, it's high. You're gonna need to see this is what the market is happening, and you see the things are changing really fast. Things are changing really fast. I was actually making a joke in the morning, and it's because of the breaking news that I saw in the morning when you're doing the market brief this morning. It was just like less than 24 hours ago, we were watching the final World Cup, and we all saw Trump was there, all right? And they were seated next with the Canadian president, actually, just making conversation and making fun about and enjoying the ball. Then after that, Trump announces that hits them with a 50% tariff, and I'm like, yo, they were just chilling, So things are changing quite fast. The markets right now is quite with Trump over there, the market is moving. Is moving in and doing great stuff and moving really big. So it's really important for you to keep an eye on that. All right. So time commitment, again, low and high. On times of risk, like we said, it's a high risk kind of business. Of course, it's good for you to know that. Do not think it's not a get rich quick kind of business. That's the biggest scam of a belief that you could have, is thinking that you're gonna be driving that Ferrari tomorrow. Well, I could be driving it if it was that easy, But again, you need to ask yourself, if it was that easy, like people say Forex is just easy, then everybody could be doing it, right? Why is it that not everybody's doing it? The thing is, we gotta learn. Once you finish learning, remove the L, take the earning bit, all right? Always know that there's a risk involved in that. And if you look at the difference between trading and investing in terms of risk, market and farm risk is what we expect in the investing. So market risk is basically, let's say, for example, you want to invest in stocks such as the medical stocks, all right? If you want to invest in medical stocks, you have to look at the whole medical market. How is it behaving? What's happening in the marketing field, in the medical field, sorry. What's happening in that medical market field, all right? The farm risk is the individual farm that you want to buy the stocks from. Let's say, for example, you have to do stock like the Pfizer, right? You want to trade the Pfizer. You gotta know that the whole Pfizer farm, which is a company itself, how is it behaving? What is happening in that company? How is the management in that specific company? There are new rollouts that are coming out. Are there cases that are coming out. Maybe there's a lawsuit coming next. You don't need to know, because that's going to affect your investment, which is the stock that you're going to buy. So you need to know all of that. All right. On trading, on the other side, the risk comes from the volatility risk and leverage risk. All right. Volatility risk is the sudden, like we talked about here. We talked about the quick rises and fall of asset prices. That's the volatility bit. The market going up and down, all right, pushing up and pushing down. So, and like I said, you buy when the market is going up, you sell when the market is going down. But should you do the opposite again, you're gonna be on the negative side, right? That's when you're gonna be facing some risk on the market. Leverage risk. Leverage risk, I'm gonna be talking more about leverage, I know, but leverage risk basically just means you borrowed more than you could be able to pay off. Right, that's basically it. I'm going to be talking about leverage, so hold on to that. We're going to be talking about leverage in a bit. I know it's part of the next bit, right? So for those who've been asking me, what is forex trading really? What is the currency market really? So this is what we're going to be. Look at this now. Let's understand what's happening. So basically, it is a market where banks, government, investors, and traders, they just come in together and to speculate and exchange the currency prices or just ideas on where the market could be headed. That is basically what the market usually do. You can see these big investors, which is the government and the banks, and those investors that are quite bigger or even more wealthier than a country. We have people like that, right? So, and also we have the hedge funds and the money managers and the fund managers, of course, as well. They usually play a very big role in the market, and that is where we have the Wall Street coming in, right? Now, this market has a daily turnover, average daily turnover of 7.0 trillion dollars. Okay, $7.0 trillion. That's a lot of money floating in the market. I usually say this is a very big piece of cake that any one of you can have a piece of it. You just need to learn how to get a piece of it. All right. And actually also learn how not to give your piece to it, because you can come in with your money and you leave it. You add the market, the daily turnover number. You put in your money over there, or you can take from there. So again, it's about just learning. Yeah, it's a 24 hours market, operates 5 days a week, Monday to Friday, closes on Friday, opens again Sunday midnight, and continues like that. And it's the world most liquid market in the world. All right. So this market again runs electronically. It's very good to mention that it goes to electronical 24 hours a day. Yes, I see you guys. Man, I'm seeing a lot of people that I know, Cassie traders. Yeah, I know you. Thank you for joining, man. I mean, we're gonna be doing great stuff with you guys, man. Cassie traders, I'm gonna be reaching out to you very soon. I'm gonna do some good traders, and I see a lot of you over there. So I'm gonna be doing a shout out today. All right, it's the first webinar, so definitely, I'm gonna be doing a shout out to everybody that is there. Just keep sending them comments. Just keep talking over there. I'm gonna be doing. I'm gonna spare some time. We just do some shout out over there. All right, tutume salamu, sindio? All right. So why choose trading? Why do you need to choose trading? Number one, these are some of my reasons actually. These are personal. I just chose to let you guys into this. This is one of the reasons, some of the reasons why I chose trading. It's an income for eternity. Again, what we mean by income for eternity is just that you just need to build the consistency. Yeah, it's a long-term income stream through disciplined trading, of course, that is coming in. All right, then it's gonna pay you as long as you learn the skill. Treat it as a business. Learn the skill. It's gonna pay you for a lifetime, of course. All right. I'm not guaranteeing you like profits every day. No, I've been in the market for 10 years now, and I still have losing trades, and it's part of the game. Okay, it's part of the game. All you need to do is to risk manage your accounts well, risk manage your money well. Make sure that you don't lose the account. You can lose a trade, but don't lose the account. Right? So it's very hard. Nobody should tell you that they don't lose a trade. That would be a lie. But someone can tell you that they don't lose an account, which is very true. Okay. The minimum equipment needed, basically all you need is a laptop, internet connection, and the skill. The important bit is the skill bit. The skill is very important. All right. It's 24 hours on operation. Markets are open they're all around the clock. Like we said, it's 5 days a week. worldwide access, trade any market from anywhere in the world. Whatever you see we are doing right now, and we're going to start right now, is the same thing that is going to be it's being taught in China. It's the same thing that you're going to learn even if you're in Australia, even if you go to whatever. Give me another country, Middle East. It's the same thing. It's going to be learning there from Thailand, from Singapore, from Malaysia, Mauritius. It's the same thing. All right. And you can always start small. You can always start small. You can begin with a modest capital and scale as you grow. Pole, 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 pole. You can do your $100 depot. Pole, pole. Grow it slowly, 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 slowly as you go up. Observe some very good risk management, of course. And I am a student of risk management myself. So ask me about risk management. All right. Yeah, sure, you're right. All right. So our financial instrument, what we have currencies, we have stocks, we have energies, we have stock indexes, metals, and ETFs available on our platform. Of course, you can access them through the portal once you open an account. Let's talk a bit about the currency quotes, right? So FX market or the Forex is quoted in currency pairs with three-letter code, right? It's usually quoted in currency pairs, and these currency pairs are greeted as three-letter code, right? So the major currencies are the most liquid pairs with a tight very spread, of course. These are the major pairs that we have, of course, or that in the market, Forex market, of course. Yeah, ready to learn. Yeah. Some of the major pairs that we have is Euro USD, GBP USD, USD JPY, USD CHF, USD CAD, NZD USD, and AUD USD. Now, I have a question. What do you think is common over here? What is common over here with all these pairs that are here? What's the common thing that you can see over here? Let me see. I'm posing a question to you guys. Yeah. Oh man. What do you think? What is common with all of these pairs? You can see over here. The chat box is open. Okay. Mm-hmm. Mm-hmm. You have the USD, the dollar, Euro USD. Euro USD is okay. Yeah, it's the most common traded. I think I should have specified that. I understand where you're coming from when you say Euro USD because it's the most commonly traded currency. What I was asking is between all these currencies that you can see on the screen over here, what is the common thing? They share a common thing, which is the USD. All right. So major currencies, when you hear people talking about the major currency pairs, they are the currency pairs that are paired with the USD. Okay, and you see this is how they usually trade it. Now let's say, for example, you pick like the Euro USD over here. If you pick the Euro USD over here, it means it's the euro paired with the dollar. Right. So when you buy the euro, you will automatically be selling the USD. And when you sell the euro, you'll automatically be buying the USD. That is what basically usually happens in the market. So anytime that you press that buy or that sell, you're doing one action on the first currency over here, which is usually called the base currency, and the second currency over here is usually called the quote currency. So once you press the buy, the action is always on the base currency, right? And the opposite action happens on the quote currency on the other side, right? Okay. So, and if you see the rule of pairing these currencies, basically the way they are, like right now, euro versus the USD, it means basically the first currency over here between these two, the first currency over here is basically the strongest of the two. Okay, so that's why you will never find a pair called USD Euro. You will never find that, but you will find Euro USD. Okay, so it's usually like there's a breakdown of how this market. Yeah, usually like there's a breakdown of what is the strongest between the two, and that gets to be the base. What is the weakest between the two, and that gets to be the quote, right? Because again, you need the base. The action is always based on the base. If you buy or sell, it's based on the base. So it has to be stronger to pull the other one or push the other one. Okay. All right. So those are some of the currencies that we have over there. Major currencies. So how do you trade the currency? So let's understand the currency quote really quick. Yeah. So here we have GBP in the USD, and the question is 1.51258, right? One British pound is equivalent to 1.51258 of the USD at that moment. Again, it has to be at that moment because the market keeps on changing, right? It's a 24 hours thing. Remember what you said, right? So One British pound is equivalent to 1.51258 USD at that moment, right? So if you want to buy one British pound, you will pay 1.51258 of the USD, right? So, like I say, this is the base currency, this is the quote currency. The USD is the quote currency, the GBP is the base currency, right? So, this is the equation is as simple as if I want to buy £1, I will pay this amount of the USD, right? Can I have a pen? Let me get a pen. Let me get a pen. Let me get a pen and put it. I think white is okay. Yes. So if you want to buy £1 over here, you will receive this amount over here. All right. Again, if you want to sell this one, you will have to get this one back in return. So that's basically what we mean over here. Yeah, that's basically what we are saying over here. So if you want to buy one GBP, you pay this one. If you want to sell, you will receive the same amount over there. And that is basically how the market works. That is as easy as how the market works. Let me erase all of that and go on to the next one. All right. So there's some basic terms that you need to know about the market, of course. Once you get yourself into this market, there's some things that you need to, very important stuff that you need to know, because you will hear these words going all across and they may confuse you because some of them you know them, but you know them in a different meaning. Like when, for example, if you talk about the balance, okay? If you talk about the balance, so quick question. I'm going to ask you some quick question. I want to show you that you know these things. It's only that sometimes you may be knowing them, but still, I have a question. What is when you go to the shop? When you go to the shop with, let's say, with $1,000, 1,000 Kenya shillings. Sorry, let's bring it home. If you go to the shop with 1,000 Kenya shillings and you buy something that is worth 500, what is what do you tell the shopkeeper? What is that money that you're giving back? What is it? Yeah. What is that amount of money that is given back? I'm waiting for your comments over there. You pay balance, balance. All right. Is it balance or change? Now I have people saying balance. I'm actually saying change. So which one is it? Is it balance or change? See, see, there are some things that we know, but we don't know. Actually, we know until is it change or balance? Here's the question. All right, now let me post you another question because people are saying change. Let me put another question. What if I have 1,000 Kenya shillings and I go to the shop, I don't buy anything, but I tell this person, you know what, I need you to break it down for me. Just give me maybe like a 500 and then 200, 200 notes and $100. What is that? What do you say? Is that balance or change? So now I'm confusing you. See, that's the importance why we should do these terms because they kind of it's something like but then again, it's something like but then again, when you see the definition of it when it comes to the financial market, it's quite different, right? Now that's change, right? So we're saying that's change. Okay, let's say if you go with $1,000 and I tell someone to break it down to me, basically I'm going to change. I'm just going to change the $1,000 into this small quote, right? That's be now a loose change. That's what we call ndio change. So ile ya kununua mkate unarudisha pesa, that is not change. Ile ingine that is not change. Right? The other one is not change. All right. Wait. Megan, you're saying you don't think the webinar is on YouTube. It's on YouTube. I mean, we are on YouTube right now, right? It's on YouTube. I mean, that's where you're typing from, right? I mean, do you want to check your connection from your side, maybe? Right? Yep. The rest of the guys, you can hear me well, right? You're on YouTube, right? When you see such a comment, you have to address it quickly. You don't want to be speaking to myself. All right, good. Okay, yeah, just check from your side. Yeah, it's on YouTube basically. The rest of the guys are on YouTube. Just check it from your side, probably. Megan, David, just check probably, or you can just type Anzo Capital Kenya and you will see it over there. It's basically live right now. Right. So basically, on the forex market, balance is the total amount funded in a trading account. Right. In this is another difference thing. In the forex market, what you fund in your trading account, that is what we call balance. Now it's no longer what is remaining from after buying something with that's $1,000, which is the balance. Now it's no longer that, right? Yes, it's on YouTube and hearing it loud and clear. Thank you guys. Thank you. Patrick, what up? How are you? Equity, money available after closing an order in profit or loss. So that's the equity basically. So there are things that you're going to see on your MT5 when you download the MetaTrader 5 or MetaTrader 4. You're going to be seeing their balance. It's going to be the amount of money that you fund. Equity is going to be the amount of money that is available on your trading account once you closed an order either in profit or loss. So you remove the floating loss or floating profit, that's exactly what you'll be remaining with. That is basically the real amount of money that you have. So you can be having a balance of $1,000, but the equity reads as 800. It means that you have a running trade of maybe negative 200 USD, right? So that's basically equity shows you exactly what you have should you decide to close the trades running at that point, right? Spreads on the other side, spread will be the difference between the bid and the ask price, which is basically between the buying price and the selling price. Okay. When you look at the market, of course, you have to have a buying price and a selling price. This is the price that the broker is willing to buy from you and to sell to you, and the price the broker is willing to buy from you, right? So that difference is basically what. Oh yes, I thought it was on Anzo platform. Yes, it's on Anzo platform, Anzo Capital. Oh no. It's no, it's on YouTube, Anzo Capital Kenya YouTube channel. It's over there. Right. Good. Yeah. Great. Glad we're together now. Right. Yeah. I would have stopped everything first of all to sort you out. But we good. Pips. Pips, the unit measuring the units measuring the changes different in value between two currencies, right? So when a currency moves, let's say for example Kenya shillings versus the USD, let's say we have a pair like the USD KES. Let me make some drawing over here. Let's say we have something. Don't mind my drawing, man. I mean, USD KES. I'm the best drawer. Well, if you are good in drawing, are you called a drawer? I don't know. What are you called? Kizungu. Please don't laugh. Jex, don't. I see you typing. Don't even start. All right. No, I told you we're gonna make an interactive. It's an interactive session. You'll have fun. All right. So here we are. USDKES. Let's say, for example, the price is at 130, right? So this means if this number moves to let's say 1.35, like that, then it means that the market has moved 5 pips. Okay, so that is what we're gonna be calling 5 pips at that point, right? So basically that's it. I know we're gonna be calculating it from the decimal points, but I'm just giving this as a solid number so that it can sink in very well. All right. So that's basically it, and that is how the market usually moves. So pips is what will be counted over here, and I need you to save something. Right, I need you to have this, write this one down, and then we're gonna be talking about it. We're gonna talk about it a bit later. 1 pip, it's a formula that I'm giving you. 1 pip is equals to 10 USD. Just write it down. 1 pip equals to 10 USD over there, and we gonna be talking it. Right. Oh, well, draftsman, Matimuchori. Okay. No, if you're a good drawer, I don't know. Why am I saying drawer? I said drawer and I thought drawer is a cupboard. Sometimes, like I say, there are things that we think we know until someone asks you a question, and then you're like, okay, hold on. I thought I know that. And then you're like, okay, I didn't know that. So, all right, let's go next to Mchori. Draftsman. Hey, okay. I don't really believe this one, Joy. Draftsman. I'm gonna have to do to chat GPT this thing after. Artist. Artist si wa kuchora? Ama kuchora ndio kudraw? Oh man. Okay. Yeah. I think kuchora ndio kudraw. Na kuandika. Okay. Hey. All right. Basic. Let's focus on forex. Kama kizungu, it's not our mouth. Basic currency terms on the other side, right? So we still continue with the basic currency terms. Bullish in the market. When you hear people, elaborate what's a pip kindly. Okay, yeah, I'm gonna go back. No worries, Joy. Got you. All right, so pip. Let's talk about the pip, Basi. Let's make it make sense. Pip is basically, let me write a number that makes sense, like USD. Let's do USD JPY. Wait. See the way I'm drawing even with corners. USD JPY. Let's say USD JPY is equals to 1.3. I'm just guessing a number. It's not, doesn't mean that is the number right now. 1.3478, like that. Right? So that's the number that is there over there. So a pip is basically just the unit that measures the change in value. It's a unit measuring the change in value between two currencies, right? So remember what we said first of all when you are reading the currency quote. We said in this quote, this equation over here, what it means is $1 is equivalent to 1.39478 JPYs. Okay, and I know this is not the equation right now. I should have not even written the JPY because it's gonna confuse you more. Because JPY is totally different. Yes, totally different equation. Let's use USD CHF. Yes, like that. All right, use the CHF. That is the number. All right. Let's say, for example, now, $1 is equivalent to this amount of the CHFs. Okay. So what we're going to be doing over here is, if this market moves up, let's say, for example, it goes to 1. Let's say, for example, we go from my laptop needs some energy over here. All right. Let's say, for example, we move from 1.39478 to a number like 1.394 no, 1.3950. Let's just go for a flat number like that. 1.345. Oh man, what's this? See now. 1.35. 5.2, something like that. All right. So we get something like that. We're gonna say that this market has moved. No, man. No. Why am I confusing you guys? All right, there we go. I think the drawing is really getting me. Let's say 49 or something. 490. There's something like that. So you have a number like this. This number moves from this number to this number. Of course, this number is greater than this one, of course, right? So the difference between this one is going to be you over here taking this number and minusing this one, of course, so that you can see that the difference between that is going to be 2 pips. It's going to be just the 9 minusing the 7 over here. And that's going to be around, 2 pips. So what we usually do is we ignore the 5th digit over here. Ignore this one. And then calculate these ones, the 4th digit. All right. So the pip is usually calculated from, the pip is usually calculated from the 4th digit from the decimal, 4th digit from the decimal on any USD pairs, apart from the USD JPY pairs. The JPY pairs, that they don't have they don't have 5 digits after the quote. They have 3, and that's why you calculate from the second digit after the decimal. Now the rest of the other currencies you calculate them from the 4th digit after the decimal, right? So now this number minus this number, it will give you 2, and that means that the market has moved 2 pips. But remember what I told you, the equation that I gave you, 1 pip is equals to, I had told you to save this one. 1 pip is equals to 10 USD, meaning if the market has moved 2 pips, how much money is that in USD? It's going to be a quick cross multiply. 1 pip is equals to 10 USD. What about 2 pip? Quick cross multiply, and you got yourself 20 USD over there. It's like that, right? So basically, that's what's going to be there. It's 20 USD coming in, right? We get it? Are we good now, Joy? I hope you're good. So basically, that's how PIP move. PIP is just the unit that measures the movement. So the market over here, when it moves from one digit to another, we call it a PIP movement. And every single PIP movement is equivalent to $10. So you can imagine that is how easy you can make money, and that is also how easy you can lose money. Because again, if the market is going against you, you're still doing the same calculation, but now on the negative side on what you're losing. Yeah. So let me remove all of this and we continue. So we're talking about some of the other currency or some of the other terminologies that you will meet in this Forex market, which is something like bullish and bearish. All right, good. Yeah, thanks. All right, this is bullish, and no, we will come to lot size. Don't worry. The calculation that I've done has nothing to do with lot size at all. That calculation has nothing to do with lot size at all, but I will come to do a calculation that has to do with lot size. Okay. So it's just a simple calculation on, first of all, to understand the pips, and then we're gonna get into the lot size. But of course, 1 pip is equals to 10 USD is based on standard lot. Is based on standard lot 1. Okay. So if you're not using a standard lot, definitely the equation will change. It's not going to be 1 pip is equals to 10 USD. If you're using 0.1, it's going to be 1 pip is equals to 1 USD. If you're using 0.01, it's going to be 1 pip is equals to $0.1. You get it? It's a good question. Who was asking that question? Dominic. No, Dominic. No, Mercy. Thank you for that question. That's a really nice question. It's a really nice question. All right. But I will do a full on risk management. We'll do a full calculation right now too. So bullish, upward trend in the price. Okay, when the market is moving up, we say that the market is bullish. All right. So bulls in the market symbolizes the market going up. Bears in the market symbolizes the market going down on the other side over here, right? So bears is the market moving down. Bulls, the market going up. And the market, by the way, the market doesn't move. It doesn't move in a straight line. You will never find a market that moves in a straight line. This is how the market moves. You see, Evo. That will be a bullish market. A bearish market will be market in a car going down. So it always has these higher highs and higher lows, and lower lows and lower highs. So if someone asks you, how do you know the market is bullish? It's because it has a formation of higher highs and lower highs. If you want to know how comes the market is bearish, because it has a formation of a lower lows and lower highs. Okay, so that's the easiest explanation for say. So siseme tu ati market inaenda juu ama inarudi chini kwa sababu the reason why it's going up or going down is because the market is bullish or what, or because market is, the candles are green or red. No. Yeah, 1 minute. There we go. All right. No, I'm sharing with my guys over here. All right. All right, good. Yeah, you see some guys asking for the links, so just posting the links over there. All right, long. When you hear people talking about long, it has nothing to do with the size. Ama urefu. No, basically in the Forex market, we're talking about long, or the financial market, we're talking about entering a buy order in the market. So usually say the market is bullish and I'm going to take a long order, right? Or I'm going long because the market is bullish. See, that makes sense. Basically what that person is saying is that I'm buying because the market is going up. It's an uptrend, right? Bearish on the other side, we say the market is going down. Short, we say that the market is basically, that's when you enter a sell order. So you go short because the market is bearish. All right. Now we have these are the two things that are remaining over here, which is leverage and margin. Right. So basically, leverage, what leverage does, remember we had mentioned it and I said I'm going to mention it, I'm going to talk about it more. This is where we are. Leverage basically allows a trader to control a larger position with a small amount of actually trading in funds. Right. So with the leverage, what it does is it gives you the power, a bigger purchasing power, basically buying or selling power, depending on what you're doing, what action you're taking in the market. So leverage basically comes in over there to help you to scale up and be able to purchase a bigger amount of contract than actually your actual trading fund that you have. That's why you're able. Let me ask you. Let me show you an example of leverage over here. Let's say, for example, the price right now of XAU USD. XAUSD right now is retailing around 42 something. All right, let's say just chose a number 4207 over there. All right, so this means for you to purchase 1 ounce of gold, you need an equivalent of 4,207 USD. This is on a 1:1 leverage. Let's say, for example, this is the physical market you've gone and the leverage is 1:1. On a leverage of 1:1, it means you need to fill up the amount that is equivalent to the product that you're being given. All right. So in a leverage of 1:1, that means I need to have an equivalent of 4,207 and above for me to be able to trade gold. But here comes now the leverage that we have. Let's say, for example, we have 1:400. Because with the Anzo Capital, you get 1:400 max. That is as per the CMA rules, okay? 1:400. So this means I can be able to, for everyone, 1:400 means for every $1, I'm able to control a contract size of 400 USD, worth 400 USD. Okay. So it means I can be able to play bigger with a leverage like this than a leverage like this. Okay. And of course, so does the risk of course, risk comes in as well. Okay. But this is why you are able to have a $200 account. You funded $200. Sorry, let me draw it here. This is how you're able to fund a $200 account and still trade gold. Why? Because in your $200 with a leverage of 1:400, it means for every if for every $1 you can be able to trade something worth $400, what about in $200 that you have? See, basically you have 80k USD. In a leverage amount, what you have when you fund $200 in your account, the leverage amount that you have is actually 80,000 USD, and that's why you are able to trade gold, which is worth 4207. Yeah. So now the thing is, on the rear side, on the other side, this is what happens behind the scenes. Of course, this is the calculation that happens behind the scenes, and that's why you're able to open a lot. You see, someone has $200 and you're able to trade like 3 open position of 0.01 of gold, and you're like, okay, how is this person doing this? And because of the leverage that is there, right? So the leverage helps you to actually deal in on a bigger contract size, but having the still has the minimum amount of deposit that you did, which is a good thing. And all you need to do is to study some good risk management, because again, you can also lose a lot, because your head will be like, okay, I have 80k leverage, okay, so I can open as many trades as possible. And the moment you keep on opening the trades, what you're doing is you're eating on your equity. Remember the equity that we talked about? You're eating on your equity, and the margin is going up and up and up and up, because for every open trade there's a margin to be placed. Margin is a good faith deposit. So for every open trade, there's a margin calculation that is usually there, and that's amount of money that is put aside on escrow for it to control this running trade. So the more you open trades, the more the margin is inaisha. Okay, and the margin ikiendelea kuongezeka inamaanisha inaisha from, it's taking from your equity, taking from whatever you have as margin, is being eaten, and that's why you end up getting a stop out, or getting a margin call. You get a margin call when your margin is below the specified amount of the stop out level that is given by every broker. Has its own stop out level, so you just need to figure that out, and things gets easily. All right, so leverage, of course we're going to be doing more about this, even I know we're going to be calculating with this, of course, in a few. What are we doing in risk management? We're going to do good calculation, factoring everything, lot size, leverage, what margin. We're going to do that. All right. Very important, by the way, when you're doing FX, you have to factor in technical analysis, which is very important because it's one of the major movers of the market on how you get the decision now, either you're buying or selling. And we also have fundamental analysis, of course, but fundamental analysis, we're going to be doing we're going to do a whole webinar on fundamental analysis. I'm going to be communicating the dates soon. But we're going to be doing it, of course. We're going to talk more about how you read news and things, and how you observe the market using the news, observing the news. Without forgetting, on the 7th of next month, we're going to be hosting at 3:30 p.m. We're going to be hosting a live NFP trading session. So don't miss on that. Don't miss on that. Start registering now as soon as quick as possible. If you look at Anzo Capital channel, by the way, it's already scheduled over there on the 7th of August. Just look at it, go on the live sessions, the scheduled sessions over there, click notify me. All right. Again, there's a link as well. You're going to be receiving a link on your emails and your WhatsApp, and whenever you see a text from Anzo Capital, just save the number, save the number. It's going to be easier for you to be getting notifications from our side, and of course, keep you updated on what we're doing. Yeah, you're gonna be receiving calls, you're gonna be receiving emails and WhatsApp messages as well on the same or the 7th August, NFP August, and yeah, we're gonna be doing a live trade. We'll do a live trade on it. I'm gonna be having my MT5 funded, so you're gonna need to get your trading account funded. Let's meet on the ground on the 7th, and let's do some good exercise in the market, right? All right, so technical analysis is one of the major things, and with technical analysis, basically, you usually look at the historical patterns, and we use that to identify potential places where the market could be going. So you use that to predict the future prices. We believe that because basically this market is driven by people. Like we say, there's bank, investors, government, and all of these institutions, they are run by people. So basically, at the end of it all, the base of it all, it is people that are driving the market. And human beings have traceable or a predictable behavior. You know that. So if you can predict the behavior of human, then you can predict how the market moves. And that's basically how easy it is for you to do technical analysis. All right. So in this market, we have two people, which is the growth investors and the contrarian investors. Basically, the growth investors, they usually focus a lot on the momentum wave just to push on the price. They ride on the buy side, on the positive side of the market, which is the buy side, the momentum wave. Contrarian investors usually look on the weaknesses of the companies, and if you're buying a stock, maybe you're just looking at the weaknesses of the company and what's basically happening on the other side, right? So that's two. Remember, the trend is your friend. It is always your friend. You go against the trend, you lose. Go along the trend, you win. So basically, a market like this, it's a bullish market going all the way up. All right. I told you I'm not really good in drawing, but I got something. It's something. It's coming in. You see, right? So yeah. So the uptrend, you see, it's creating higher highs. So in an uptrend, each new high is higher than the last high that was there. So you ride the momentum over there. So basically, the trend is your friend on the market, like that, right? Let's do some risk management now. This is a fun bit. This is a fun bit. I love risk management because that's the only way that you get to make money in the forex market, by managing your risk. It's the only way. Yeah, we can learn all these strategies or whatever. There's always a new strategy coming out in the market, and there's always one that is hyped a lot by people. But at the end of it all, It doesn't matter what you know, even if you have a PhD in forex trading, as long as you're not risk managing your account you will still lose. You still lose the account. So risk management is the key thing. Right? So I'm going to show you how to protect your capital. This is the Forex 101 risk management, how to protect your capital, right? And the FX 101 risk management, you usually talk about take profit and stop loss. It's as simple as that. Risk management it's a deep topic. Of course, we're going to be doing a lot of it as we go. But for this one, I'm just doing the simplest bit. I know you usually say I know how to put stop loss and I know how to put a take profit, but do you really know how to calculate where to put that stop loss, or do you just put the stop loss based on okay, wacha tuweke hapa chini kwa sawa, ama tufanye tuweke tu hapa, tusiweke mbali sana, ama tusiweke karibu sana? But do you actually do the calculation to see how much money you're risking according to your account size? And that is what I want to show you now. Now here we have a guy over here. This is the Trader X. Trader X has an account balance of $10,000, right? So we're gonna do a breakdown, a very nice breakdown over here. So we start with the balance, which is 10K. This guy has 10,000 USD in the account, right? And then this guy, and this is basically a checklist we are creating. This guy decides to risk. Of course, when you enter trade, you're deciding to risk. So how much are you? And it's very important. Most of the people don't do this. Do you ask yourself how much you're willing to risk, or you ask yourself how much money you want to make in the market, right? It's not Trader Jake, no. The most important question that you should ask yourself before you take any trade, how much are you willing to risk? Not how much money you're looking to get. All right. So this person tells himself, you know what? This Trader X, Trader Jake himself, tells himself, you know what? I want to risk 5%. I'm risking 5%. So that is 5. This guy risks 5%. So before you even continue further, you need to do this calculation. What is 5% of the account? Right? 5% of $10,000. Watu mbio mbio tufanyeni hesabu. 5% of 10K. I want just to do at least everything over here so that I don't want it to float. It is 500. So 500 USD. Okay. So this person basically is risking. It's safe to say that the person is risking 5%. Also safe to say that the person, by risking 5% in terms of dollars, is risking 500 USD. In terms of percentage, is 5%. In terms of dollars, 500 USD. What about in terms of pips? Remember, we are working in pips in Forex. And we said 1 pip is equals to what? 1 pip is equals to 10 USD. Nipatie any calculation. So if this person is risking $500, which is 5%, how many pips are those that is going to be risking? If 1 pip is equals to 10 USD, then what about 500 USD? Cross multiply. It's going to be 500 divided by 10. It's going to give you what? Where are my mathematicians? Let's get it. It's going to be 50 USD. 50 pips, right? Good. Yes. Heroin. 50 pips. So this person, it's safe to say that this person is risking 5%. And I can also show this. No, the person is risking $500, and the person is also risking 50 pips. So we are both talking the same language. We are both talking the same thing, different languages. We are talking about the same thing, because if I'm just looking at the risk in terms of dollars, which is $500, the other person is looking at the risk in terms of pips, which is 50 pips. The other person is looking at the risk in terms of percentage, which is 5%. So basically, you see, the calculation is all the same. So that is what we're risking over there. So that person having decided that makes it much easier. Remember, this is based on one lot. Okay? This is based on one lot. So it means this person is going to be taking a single lot. It's going to be taking one lot of in the market. Okay? And this is what is it. So pip value per standard lot, 10 pips, which is 1 pip is equals to 10 USD. That is basically what we're talking about here. So the risk over here is 50 pips, right? Now this trader X, wants to take a buy order. So you want to take a buy order. which is a long position. Remember, we just started long. It's a long position. So the buyer want to take a buy order. The entry point is 1.1 thousand. That is the entry point that the market is. Hapo ndio anafinya buy. So how does this person know where to set the stop loss? This person will take the 50 pips because market is moving in pips, right? So he'll come and say, this is my entry point. I need to, because I'm anticipating, since it's a buy, it's a long order, I'm anticipating the market to go up. In the event that this market doesn't go up and start coming down, it means I'm losing. I'm gonna need to have a cap on based on the amount of money that I'm okay risking, which is 50 pips, which is $50, $500, which is 5%. So I will minus 50 pips over here to see the exact place that I should put my stop loss, the exact number, which is 0, which is gonna give you 590.1. Okay, so you see, so that person, this is where the stop loss goes, SL. So if this person sets this stop loss at this point, come what may, simu izime, chati hang, I don't know, Trump arushe missile, whatever happens, this person is only going to lose 50 pips, which is $500, which was okay with from the beginning. Remember, it was a decision made and he was okay with risking the $500 from the beginning. Atakuwa na baki na, let's say for example, may lose, he will be left with a very good amount that he can still recoup himself with. Okay? Oh, no, not, yeah. Right? So it makes sense. It makes sense in the market. It makes sense to do such a risk management bit. Right? Did you guys get it? Right? Any question on that? So you see the way we've done a very simple calculation. Everybody can do this calculation. Pole, and we've ended up to find where to put the stop loss, which is based on the risk. And this is the best approach if you want to do good risk management. Always base it on the numbers. It's very easy. Do the calculation. But the most important bit, and that is the bit that I cannot tell you what to do, is here. The decision bit. You need to decide what you're okay, what you're comfortable with risking. What is the percentage that you're comfortable with risking? Some will go with 2%, some will go with 1%, some will go with 10%. It depends with your risk capacity and your appetite for risk. All right. Some people like having a $10,000 account will be like, I'm okay with risking $2,000. You see, and some will be like, oh, even $500 is a lot. I need to risk 1%, maybe $100 max. It depends with you. So this is why I'm telling you that I cannot really control you on this. You have to make that decision, and then now we do the calculation. That's why most of you will be like, where do I put my stop loss? I'm like, how much are you willing to risk? See, I return it back to you because you have to do that calculation. You have to be okay with it. If I make that decision for you, when you lose, you're going to blame me. Because maybe my risk appetite is bigger than yours or it's smaller than yours. Yeah. It's a high risk, high potential reward kind of business. Yeah. All right. So yeah. So the person over here done very well, calculated the market very well, and they're good to go. So now we have a number to put a stop loss on. That is where the person is going to be putting stop loss in, and the market behaves and respects it. So come what may will happen, that person will never lose more than $500 in that account. So will that person ever blow an account? No. He can lose the trade, but he'll never blow an account. That's why I was telling you. Losing a trade, that's dependent on the market, where the market is headed. Losing an account is fully dependent on yourself. You're the one who lets the account get blown. So we can fix that, of course. All right, let's continue. Risk reward ratio, which is very important. So we found out where to put the stop loss. Now let's find out where to put the take profit. Based on the previous calculation that we've done over there, this person, we have risk reward ratio. The entry of the USD was of the Euro USD was 1.1 thousand over here. So if you have to decide again, what is the risk ratio reward that you're using? Based on the market structure and based on the analysis that you've done, if that person is using a risk ratio reward of 1:200, means you're risking 1 to gain 2, which the risk over there was, our risk was what in pips? 50 pips. Okay, that was the risk. So if the risk was 50, if the risk reward is 1:2, it means the risk over here, which is the risk, and this is the reward. All right, so the risk over here is 50. What will be the reward? 100. Okay, so you'll be targeting 100 pips in that market, right? So if this is the risk, stop loss will be at this point, but what will be your take profit for 1:2? 1.1000, which is the entry, plus 100 pips, and your take profit is going to be at 1.1100, and that's going to be your TP area. You get it? Simple, easy calculations. So now you believe me when I tell you don't have to lose an account. You can lose a trade, but you don't need to lose an account. Jakes. Okay. Chapatana too. You know, one day I'll give you a testimony, Jake. I know. It's a good guy. It's a good guy. All right. So yeah, if you're using 1:3, you're gonna do the calculation just again times 3 times 4, depending on where you're headed to, right? So that's not quite hard, right? Now, what are the skills that are needed to be a successful trader? Skills needed to be a successful trader. Number one, emotional resilience. You need to be able to control your emotions, right? You need to have the ability to take a loss without being emotionally affected. I mean, lose a trade, but don't lose your head. You know, you can lose a trade, but get yourself up, and you'll be good. Dedication to be the best Forex trader you can ever be. How do you dedicate yourself? Learning and learning and learning. Trust me, I've learned today as well. I've learned something today, and I will learn tomorrow. I will keep on learning. I'm always a student myself. I know I teach, but I'm always a student. I have to learn. Right? So that is dedicating yourself to be the best Forex trader. And the good thing is that Anzo Capital are giving you free education. You see, right now nobody's charging you for this. It's free. All you gotta do is just have internet on your side and your smart gadget and be there. Patience as well. Ooh, the market will teach you patience. Trust me. Ooh. This market teaches you patience a lot. Yeah. You have to wait for the high probability setups. There are setups. If you followed my market brief that I usually do in the morning, you will hear me telling you this is an aggressive entry. This is a safe entry, potential safe entry, potential aggressive entry. You'll hear me telling you all this. Why? Because some of the areas needs you to be very patient to wait for the high probability setup, and some of the areas I'll tell you this is not the highest probability setup, but it could be a potential area for entry, right? So high probability setups, right? Confidence as well is very good. Believe in your trading strategy, follow it, learn it, make it work. Focus, concentrate fully on your trading plan. Be fully present on your trading plan. Concentrate on it. Don't be very present on your trading plan. Don't give up on your plan just because you've lost, right? We lose trades, we don't lose accounts, like we said, but focus kabisa, have a trading plan and follow through to it. We lose trades, we don't lose accounts, like we say, but focus. I decided to watch myself also on YouTube just to see what you guys are seeing. Jake. See you. All right. Oh yeah, you're having a good view over there. Oh, that's nice. All right. Realism. It's not a get rich quick. Oh, this one I need to repeat and write it. I think I should write it in capital letters. It's not a get rich quick scheme. No, you're not gonna be driving that Ferrari tomorrow. You're not gonna be flying to work tomorrow with a helicopter coming from home, but you would do that eventually. It's very possible eventually to do it in a couple of years, couple of some good disciplined days. You can do that. But It's not going to happen tomorrow. You're going to need to learn. Dedicate yourself to learn and do and get yourself to be the best FX trader you can ever be, right? Self-control, do not overtrade. It's just quality over quantity. I can do 2 trades. This is what I usually do. I usually do 2 trades a day, and that's me. 2 trades a day, and I'm done. Okay. So for me, it's not about the quantity of trades that I'm taking, it's about the quality of the trades I'm taking. That's what I'm saying about the patience and the high probability setup. I get just 2 high probability setup and I'm done for the day. I don't want to take, in the beginning when I started, I would take like, I don't know, like 50 trades in a day. But I realized it's quite hard for me to manage 50 trades, especially when there's high volatility happening in the market. It's hard for me to close all the 50 trades than having only 2 trades that I can see and I can see where them go ahead. And I've already done a very good calculation on risk management and known even if it hits my stop loss, this is the amount of money that I'm going to risk, and I'm good with that, right? So that's very, very important for you to do. So how will we help you as Enzo Capital? How will we help you? Already we are helping you by giving you the free education, of course. But here we are. We're gonna give you a dedicated account manager, and I'm sure all of you have. If you have an account by now, and you should be having an account by now, actually, just go open an account. You should be having an account by now. All right, you should be able to get yourself an Anzo account this very moment over here, because again, I mean, we have an offer coming in, and I say there's a potential bonus depending on how much you stay on this webinar. So where do you want that to be credited if you don't have an account right now? Okay, so get yourself an account. Let's get going. All right. I'm trying to get. I'm going to the website right now to take the link and paste it over here for you guys to jump into it. I'm just going straight to there to grab the link and bring it to you. I'm not even gonna tell you to go to YouTube and find it now. I'm gonna send it for you. I'm gonna send it to you guys over here. Oops, where is it? I'm gonna put it over here. If you don't have an account, oops, why is it not? Okay, there we go. Can you see the link? Anybody? Yes. If you can't access that link, you can always go to www.anzocapitalkenya and open an account over there. It's possible. It's over there for everybody to see and to do and to open. Okay. There we go. All right. Yeah. Right. Open an account over there. You're gonna get a dedicated account manager. Open a demo account platform just for learning and practicing, and of course for coming for these live sessions, and we're gonna be talking about them. We're gonna be getting ourselves ready for that, just for practice. We also give you fundamental analysis reports. If you go to our socials, which you should actually, go to Anzo Capital Kenya on Instagram. We have a Telegram channel. Man, I'm gonna share a lot of links. Don't mind me, guys. today leo ni ile siku. Let me share also the Telegram channel over here. You guys follow the Telegram channel. There's a lot of content coming in over there. I'm updating it personally, so you'll be good. You'll be good. So I'm gonna share the Telegram channel as we go. Go to Instagram, Anzo Capital Kenya. See, there's a lot of posts that we're putting there in a day's time. There's a lot coming in that will help you to make decision in the market. There's a Telegram channel, there's a TikTok channel as well. There's this YouTube channel which you should subscribe as we even as we are here right now. You should just click subscribe over there and get yourself in. Yeah, this is the link. The link for Telegram. Let me just label it so that it doesn't confuse you. Telegram. Yep, the Telegram channel is over there. I'm hoping that you're able to click on those. Yes, the links have. I've said it twice. Okay. All right. All right. That's okay. And Anzo Capital Kenya on Instagram as well. Go over there. Follow those. We will give you fundamental analysis. Always post it over there. You can check also on my personal channel as well. We post a lot over there. All right. MT5 platform and indicators as well. We have them. We have a lot of indicators. We're going to be doing a session for indicators, so don't worry about them. We're going to be doing a whole session. We're going to talk about the moving average. We're going to talk about the RSI. We're going to talk about the Bollinger Bands. We're going to talk about the Ichimokus and stuff. We're going to talk a lot about them. All right, the ADRs and stuff. We're going to talk about them, all of them. Right? Okay. So here's the Anzo Capital YouTube channel. Click subscribe. Jakes. He's a funny fella. Yeah. Subscribe to our YouTube channel. Scan over there. This is the YouTube channel. Just subscribe to it. Of course, you're already in it, so I actually don't even know why I put this QR code over there, but because you're already on it, so just subscribe. Just click the subscribe over there. Hey Nancy, thank you. Yeah, it's good. It's good. Oh, I was supposed to do a whole shout out for everybody. Okay, yeah, I'll go through all the chats, and everybody that I say something, I have to say hi personally. Yeah, subscribe to that. There's a lot of info over there. There's a lot of market brief. It's gonna be coming every 10 a.m. every day 10 a.m. The market brief is always there, right? Scan over there as well. That's my channel as well. The Rich Nick as well. Yeah, so we have a lot going on. And let me check on the questions before we finish. Let's go on the Q&A, see if there's any question. I like this. There's a lot of interaction going on over here. So yeah, shout outs time. Cassie Traders, thank you so much. We're gonna be talking, of course. I'm gonna be reaching out to you guys, and we're gonna be having some conversations on moving forward. There's a Sniper, someone 2026. Is it a movie or someone? I know, I'm joking. There's Adanab or something. There's Mercy. There's Jex, you're not here. There's Grace. There's Megan David, of course, we talked about. Malcolm. There's Simple Setup. And I say hello to you too. Rose. Okay, present over there. Rose. Shaban, Hassan Ali as well. Good to see you, man. Jex again, you're always somewhere. Priscilla. Priscilla. Yeah, how are you? It's been a minute. All right. Hope you're doing good. Hope your trades are taking you well. There's Heroin. We talked about. Yeah, we did touch base, of course. Dominic, gonna be talking soon as well. Got some good stuff coming in. Gizla, There we go. Man, these hashtag names on on YouTube, some of them are crazy. There's Amel, there's Joy already had that conversation. Mercy once again, Ija Bait. Oh, man, yeah. Good to have you here, Esther Wanjiku. Good to have you over there, of course. Dominic once again. Yeah, and I mean, yeah, it's like I'm repeating myself now. And Jake is always everywhere. Patrick, we've just had a conversation a few minutes ago, and I'm great. I know we're going to do great stuff. Grace Karanja, good to see you, man. Good to see you as well. Always good, always fun to have you guys around. Wow, oh man, there's a lot of you. And now the problem is I'm trying to pronounce the names, and the names are actually Kenodi. All right. Nancy, nice. All right, some questions. Waiting for the next live. Yes, the next live is gonna be it's gonna be coming soon. So I'm in an area where I'm now answering the questions. Of course, the next live is on the 7th. So I'm gonna show this question here. So Duke Legend, Legend, waiting for the next live. The next live is gonna be the 7th of August. NFP live session. I'm going to be hosting it, brought to you by Anzo Capital KE, and we're going to be giving you some good stuff coming in over there. Of course, we're going to be having some bonus as well. I'm working on something good, so where we are, we have good stuff for you. So always be live, always be available for that, right? What if I'm a day trader or scalper? Can I take many trades? All right, so here is a very good question over here. He's saying that what if I'm a day trader or a scalper? Can I take many trades? Yeah, a scalper, yeah. Day trader, you don't really have to, but a scalper, it's the amount of or the targets, the amount that you're targeting in a per trade on a scalper could be a bit less. But it also depends with the capital that you have in the account as well. Yeah. So let's say, for example, if you have a $500 account and you're scalping, probably you're looking for $10, $20, $15, $10. So you see, and again, and maybe your target for the day is $100 a day, or let's say $50 a day. Of course, you're gonna find yourself taking a bit more trades to hit that target, because again, you're scalping, and you remember, scalping, you're not holding the trade more than 10 minutes, and you're in and out, in and out, in and out. So you may end up taking some more trades than it is. So it's allowed and it's acceptable to do that, because again of your the type of trader that you are. Day trader, on the other hand, you don't really need to take a lot of trades, because of a day trader, get yourself 2 to 3 trades in a day, and that's it, maximum. Again, like I said in the beginning, also being a scalper could depend with the amount of money. I know of a scalper, I know of a guy that scalps and has like I don't know, a 400K account, USD account, and if the guy will only take 2 3 trades again, still, because it's a lot of money. I mean, the capital is big, so you don't really need to take 100 trades. Just need to take 2 trades, 10 pips, and that's it. We open like what, 10 lots, 10 lots, 10 pips. I mean, you see, it just depends. It just depends. You don't really, yeah, it depends basically. It's just the capital that you have in there. Is it possible to be the liquidity in the market? Of course, that has to be Jake's. Is it possible to be the liquidity? Look, this is actually liquidity. It's not even liquidity in the market. Asking for myself. All right, you're asking for yourself. So let me let you answer yourself. Good job. I hope I'm well taught. Yes. Thank you very much for being here as well. Shout out. Yes. Great to see you. You're forgetting me. No, I'm not forgetting you, Dominic. I mentioned you twice. It's good to see you here, man. Ashiniaje nasaulika. Hapana, wapi Patrick? Aje sasa. Siwezi sahau. Learned a lot. Thank you. Thank you as well for listening, man. It's been really good. Abila Agneta. Yeah, Abila Agneta. All right. Yes, as well. Good to see you. Good job. Hope kufiti. Ni kufiti kabisa. All good. Educative. All right, George. Thank you. All right, now you're asking for someone, Dick. Is it possible to? She's about to be the. What's the best method ya kufanya ni avoid closing trades so early? Bro, what's the best method ya kufanya ni avoid closing trades so early? Yeah, just believing Motoki. Eliphas. Just believe in your trading strategy. Believe in your order. Because sometimes I understand you and I resonate with you. So sometimes you could open a trade and then you end up closing it a bit too early before you even realizes some profit, because maybe you two emotions that drive the market: fear and greed. So I will categorize you as fear. You're still not fully confident in yourself and you don't really trust the trades that you're taking completely, but you should. That is basically the psychology of trading. Actually, you should join a webinar. I'm organizing one webinar for psychology of trading. I'm hoping to make it as a seminar, but before that we could do a webinar, of course, but I'm hoping also to have a sit down or a meet and greet with most of you and just talk, just have a forex conversation, the psychology of it, and get it. So we're gonna be sending you info on that. But basically all you need to do is to take a high probability, start looking for the high probability setups, have a checklist that you have. Then once the checklist is met, like at least 80% high probability setup, take it. All right. And yes, Anzo, does it have both MT5 and MT4? Yes, we do. Choose whatever you want from that. And we also have an app, the Anzo app on Play Store. Go download it on Play Store. You can also trade through the app. Options ziko mingi. The most safest pair to trade with a small account, that will be Francis Kituyu. Hey, what up? Hey, Francis. The most safest pair to trade with a small account will be EURUSD. I'd recommend you to start with EURUSD. It's very conservative. Our ECN account start from 0.0 pips. Spreads is 0.0. Enjoy it, man. Enjoy it. Very educative, and thank you. Welcome, everybody. Thank you all for being here. It's been amazing. It's been nice. Whoa, I didn't even think we would go this long. I mean, that's been like what? 1 hour 30 minutes. Oh, okay. I thought we were gonna be doing just in 45 1 hour and get done, but it's good. It's good to have you guys over here, and felt this is amazing. This is really amazing. This is really amazing, guys. Right, guys. Thank you very much, everybody. Thank you for being with us, sticking with us over here. It's been amazing. We're gonna be having a lot of other plans now, planned events coming out over for everybody. Of course, it's gonna be inclusive in including everybody in it. And of course, I'm looking forward to doing the NFP we're gonna be doing over there on the 7th. Lock in on that and let's meet over there. Let's see you tomorrow on the Traders Brief at 10 a.m. Gonna be there, Traders Brief in the morning, and I hope that everyone is doing good. Remember the 2 links that I've sent you, the Telegram channel. Join our Telegram channel. It's gonna be here. Let me show you once again. This is the Telegram channel. Yeah, join it, click on it and join the Telegram channel. Again, Instagram, go and follow us over there, Anzo Capital KE. We're gonna be there. Subscribe and share. This content is free. It's on YouTube. Share with your people, share with your clients that you have, share with your community. I mean, it's all free to share, man. So subscribe on it. Just let's get things rolling. All right, everybody. Thank you guys very much. Have a good one. And yes, of course, I know most of you are waiting for me to talk about the bonus. Yes, the bonus is true, and we're gonna be doing the tabulation tomorrow. It should be getting. Yeah, I knew. Actually, I was asking why is Jake's not asking about the $20? Nangojea the $20 kesho mkuu. All right, so it's gonna be hitting your account in the next 2 to 3 business working days. Business days, of course. it's going to be getting, of course, we have to do some good verification to see that you have an account, you've met all the requirements, have an account, approved, done, and attended the webinar to the end. You didn't just put in your phone on and then left or stuff like that. Yeah. So we're going to be getting to you. Of course, you have an account, we have your details, definitely. And we have this, it's live recorded. Of course, I have all of you that are here. And no, it's not for you. It's not for you to view us. It's just you need to create an account. That's why we shared, right? Create an account. Let's get it, right? Okay, let's create an account over there. Get yourself an account. Let's get it. Of course, from tomorrow it's gonna be everybody's gonna be opening an account to get that thing. But again, of course, we have the times and we have the registration as well that is there. So don't worry, we got you. All right, everybody. Good. Right, guys. I'm gonna end it from that point. Thank you very much for being there. I've been your host, Nick. Call me Rich Nick FX, and we're gonna see you in the next. I have an account. How will you know? Of course, we'll know. I know if you have an account. I've just shared with you the link. So don't worry. You get you. Megan, relax. All right. We gotta get you right. See you into the next one. See you on the market brief tomorrow, and have a good one. Open an account. Let's get into this trading mode. All right. See you guys. Take care. Remember to always trade what you see, not what you think. That's my phrase. That's always my phrase every time. Trade what you see, not what you think. All right. And see you guys on to the next one. Bye bye, everybody, and take care. Enjoy.